Hello friends, welcome to Business Management, Accounting and Finance with Fardeen Sami. In this episode, I'm going to explain to you what is accounting and why is it important. Accounting is sometimes referred to as the language of the business. It is a language that dates back thousands of years ago and has been used in many parts of the world. According to investopedia.com, the first evidence of this language comes from Mesopotamian civilization more than 7,000 years ago. They used tools like abacus for simple calculation. Luca Pacioli from Italy was the first guy who officially invented double entry bookkeeping or debit and credit in the year 1494. Okay, enough of the history with the accounting. Let's jump to the presentation and learn what is accounting and why is it important. We use the concept of accounting or the language of the business for many reasons. That's why we call them types of accounting. For example, the first type is financial accounting. This is a type of accounting which is required by law and is being practiced in accordance to international accounting standards and national standard setters. We use financial accounting for the historical events. Another type of accounting is management accounting. It is not required by law and it does not have any principle and standard bodies. Management accounting is widely used to identify business operating performances and to make future managerial decisions. Another type of accounting is tax accounting, where we use it for tax planning, preparation, or tax returns and tax payments. There are also other categories that comes under subsection of accounting, such as external audit, internal audit, environmental accounting, governmental accounting, and forensic accounting. But these should not be our focus for today. Our focus will be on the most famous type of accounting, which is financial accounting. Now, there are many definitions for financial accounting in the internet which you can find, but for me, I want to keep it nice and easy. Financial accounting is the process of recording and presenting the business transactions. It really is. It's just a two-step. Financial accounting is all about record and present. What do you mean by recording? Recording simply means identifying, recording, classifying, and summarizing the business transactions. And what do you mean by presenting? Presenting simply means reporting the business transactions to the management using financial statements. Now, those financial statements are balance sheet, income statement, cash flow statement, owner's equity statement, and notes to the financial statements. Of course, before moving on, let's not forget to touch about business transaction. Business transaction is called for any event of a business where it involves a financial or monetary value. With that, we come to the final section of this video. Let's ask ourselves, why do we need to do financial accounting? Why do we need to do the hassle of recording and presenting the business transactions? In other words, why is accounting important? I want to answer this question with a very simple story. Once upon a time, there was a guy named Mike, and Mike started an online business. He understood that he could use his personal home or garage for a warehouse and packaging where he could store and sell his products to customers online and deliver to them. Mike was a retailer, which means he bought products from wholesalers and sold them at retail prices. However, after running his business for 6 months, something terrible happens. One day, while sitting in his chair, Mike realized that he couldn't figure out how much money he had spent on his business during those 6 months. He also couldn't determine his profits and taxes or track his expenses, such as packaging, delivery charges, admin costs, and utilities. It was quite an unpleasant situation because he wanted to expand his business, but without a clear understanding of his financial performances, he felt stuck. He needed to know exactly how much money he had spent and earned. Only then he could make informed decisions about expanding his operations. To make sound decisions in the business, it's essential to keep a thorough record of all transactions and financial information. This recording and presentation of business transactions help answer crucial questions about the financial performance of a business. This knowledge is vital for effective decision making. What can we learn from this story? Well, we can understand this story better if we answer this question. What would be the situation of Mike after 6 months if he had kept record of those business transactions? Well, I think the answer is obvious. Mike would have been able to better understand his expenses, taxes due, profits, and overall business performance. With these information in hand, he could confidently make decisions about expanding his online business operation. Remember, recording and presenting business transactions and financial information provide valuable and important insights that guide us in understanding our business financial health and making informed decisions. It also allows our business stakeholders such as suppliers, employees, regulatory, customers, and banks to continue their trust and business with us. That was a full summarized background of what is accounting and why it's important to an organization. Do not forget to subscribe to this channel and wait to see more about this subject and its related contents. And if you like this video, please do not forget to send your likes, comments, and sharing it with your friends. Thank you, merci, danke, tashakkur, manana.